All right, everyone. It's March the 11th, and um, through the holiday chat season this year, I had been promising a certain number of holiday chats, and for those of you paying attention, we've been one short, and that's because I wanted to make a really great grand finale at the end of the holidays, and do a case study here with Paul. Paul's an intermediary, helps people buy and sell businesses, but like a lot of business deals, this deal was supposed to have closed in November around the time of American Thanksgiving. And then it was supposed to close around Christmas, which would have put it right in line with our holiday chat special. And now it's mid-March. Paul, has the deal closed?
Yes, the deal is closed.
So it's about a 4-month delay, right?
That's about right. 4 months.
Yeah.
Now I have to go back and work harder for the next 4 months.
we just before I hit record, Paul and I were talking about this because this is something that I've shared in many videos about how these deals never close on time. And if you're looking forward to that commission check to pay your own bills as a business broker, it can be very frustrating when these deals drag on and on. But I wanted to get Paul on because I wanted him to talk to us about this deal, because this deal encompasses so many things that are seen regularly in the purchase and sale of what we'll call a Main Street business. So a regular everyday business that is owner operated by people who know their craft, but probably aren't the most sophisticated business people, quote unquote. And I'd like to go through this. So Paul, why don't we talk a little bit about the business? Can you describe what the business was that was sold?
Yes, it's a landscape maintenance company
Okay.
that had been in business for 40 years.
Right. So they were doing lawn mowing and putting in flower beds and things like this for people?
Yes, both commercial accounts and residential accounts, about 50-50 in the mix.
Okay. So before you became involved, these guys, the owners, there were two of them, they were trying to sell before you became involved. Is that correct?
Yes, I have another business associate that was also serving as an intermediary, and his expertise was franchise selling.
Okay.
And he had taken this a client as a referral from somebody, and he was working with, and he engaged me to do the financial analysis and prepare the offering package for him about 3 years ago.
Okay.
And I prepared that for him, and then he was trying to sell it.
And so after you had done your review, what did you propose would probably be the likely selling price of this business back at that time?
Back at that time, I think the number that I was comfortable with, which was pushing it, was about 450,000, if I recall correctly.
Okay.
And the sellers wanted to sell, but they had two different opinions, of course. All right, the one seller that was more urgent to sell, his partner wanted to hold out for bigger dollars. Well, the problem is, and they hadn't done anything with the business for 5 years other than maintain, if you may. And so my business associate decided to take the listing, and they wanted 600,000, and I think he got them to list it at 500, with the hope of getting the 450 of doing it. I'm not, my own personal way of doing it, setting it high and hoping to come down low is not a good strategy, in my opinion.
Well, if you set it too high, then what ends up happening is you scare off your legitimate buyers who are worried that the seller's expectations are just too out of line, that there's not a reasonable person that they can deal with. What ended up happening? Because obviously your colleague had this for a couple of years before you got the file.
Well, he had it for a couple of years, and he had a number of tire kickers. He had multiple meetings with people that were probables. And then one was, I kept hearing, oh, I got a serious buyer that went on for months. And then finally they got the lawyers involved, and then they said, oh, they needed valuation. So then they dragged it on to get valuations. And then they came back and the guy wanted to pay below valuation. and the negotiations all fell apart. So everybody was upset, and the sellers were particularly upset because the lawyers then sent bills to the seller, and it hit his bookkeeper's desk, and the bookkeeper knew nothing about this, and brings it to her as, who are these lawyers and why do they want our money, et cetera, et cetera. And of course, the sellers had to fix that problem.
Right.
So when you're trying to do a private transaction, you've got to make sure the people in the transaction know what private means.
So this business spent a couple of years on the market, and a business like a landscape maintenance company is a business that, you know, many people could probably get their arms around as far as managing and running. It's one of those businesses that is very attractive to a wide range of people, and it's one of those businesses that, if it's priced right, would tend to sell quite readily. So this one, you figure it was because they were asking too much. It ended up on the market for such a long time.
Yes. Yeah.
Yeah.
Just too many tire kickers, and it wasn't going to come down in price, and they kept. So I got a call then from my business associate that said he's not doing anything. He was retiring. He wasn't going to go. And if I wanted to take this over, since I knew the sellers, because I had did their financial analysis. So I met with those sellers and sized up, well, what do you guys really want to do? Well, now they're more urgent because it's been 2.5 years. And so they weren't upset with the effort that my associate had made. They were unrealistic. And so I told them, let me do the numbers over again and bring them current. So I brought up the next fiscal year, and now I had 5 years of very true financials. And since I had put considerable time into it before, I knew the numbers, and I knew they were trustworthy. They were good books. They reconciled with the tax returns, and I had already done all of that. So I just had to bring them up to date, calculated the cash flow. It was about 165,000, I think it was. And I told them, the assets were maybe about the same. And I said, if you want to sell it, move it on. Somebody need to finance this business. They would still need to have, $60,000 or $70,000 for themselves to live on, and they would probably need $60,000 or $70,000 worth of annual financing to cash flow it. So I said, in order to do that, the price point needs to be $330,000 or $300,000. And I said, and then my transaction fee is going to be 10%. So it's $330,000. That's what we'll list it for, and I believe we can deliver it. And they said, well, they would be even willing to sell for $300,000 and less transaction fees, a net $270,000.
And what was the state of the capital equipment in the business? All the machinery, trucks, etc.
It was in good condition, but all very old, very old. I mean, the trucks, probably the newest truck was 4 years old. The oldest truck was 12 years old, maybe a dozen trucks. So most of the equipment was pretty aged, but it was operable and it was maintained.
Okay. So once you had them on board and you determined they were a little bit more motivated and they're willing to set a much more reasonable asking price than before, what then happened as far as your efforts to find someone to buy it?
Well, what I did initially is I had my own local network of people. So I called around to people that I thought were probable candidates, people that have owned businesses, people that had a reason to maybe own a landscaping company, like a property management company, and some of those. And I got that network going so that the word was out that I had something to offer. And most of those referrals were personal referrals from my personal network I built up over the years. All right. And they were not, if you may, new buyers. These were proven business people.
Right.
And I'm guessing I probably had 6 to 10 of those that I put out NDAs and put the package out with them. They reviewed them. And out of those, I think I had 2 or 3 real interests and one crazy offer, one reasonable offer, and one no offer out of my personal. So I I introduced some of those people to the sellers, and they were okay with them, but not really enthusiastic because they were deals, all right, trying to take them out, all right, get them
Right.
out. And they, at that point, thought they should get a quote unquote real buyer or whatever, all right. So I then listed it on the commercial sites, Viz Buy Sell, and the other types of sites. And I received over probably 2-3 months, I think 40-45 inquiries.
Okay.
I processed them. My process was, as soon as I got an inquiry, within that day, they got a response email with a cover sheet, 3-page summary. And if they were capable of pursuing it, they could show me where they're going to get the money, how they're going to do it, and over a telephone conversation, which I would have with them, then they should respond with the NDA, and I'll send them the package.
Mm-hmm.
I did that. Typically, that turnaround was 48 hours. They would get a package. Those that were interested then and thought they were qualified would call me, and we would go through an interview process where I would basically size them up and
Mm-hmm.
determine if they really did have the money or the possibility of getting it. And it's just intuition at that point, all right? And fun things that range from people that didn't have a clue about buying a business and wanted to learn, and I would educate them the best I could, and then tell them, the mark is you actually have to have money, all right? And in many cases, they didn't. They just had hope, all right? And all the way to the other ones, one that was the most fun.
Did you have anyone that you spoke to who didn't have any money but believed that they could still figure out a way to get it done?
Oh yeah, I had one very entertaining one. Let me come back to that one, but I had another entertaining one that got me. He sounded very serious. He knew everything about everything, so he got me on the phone. He spent an hour with me on the phone, asking me everything about what the size of the toilet paper was in the restroom. And so after about 40 minutes of that, I said, you don't sound like a buyer to me. You sound like a real estate broker, all right? And an accountant, and then he backed off or whatever. Well, lo and behold, after I get off the phone, I searched him, and sure enough, he was a California real estate guy who had just moved here and was out shopping businesses or whatever. All right. So the reason I bring that up is honesty is the best policy on all of these things, and you never know what's going on, and particularly with the internet.
Yeah.
You can search and find out. I mean, I know more about this person that was inquiring on the phone now than he knows about himself based on the research, because I was not happy that I was trapped into a phone call and pressed on all these things. Now, he didn't learn anything any more than what was in the offering package. But why was he wasting my time when, in fact, he was trying to manipulate? So it would seem to me, and I know you present buying and selling and honor and trying to educate people on, come on, just be real and be in it.
There's got to be trust between the two parties, especially when you start to, the business seller will reveal secrets about the business or things that they do. They have to trust that buyer, and the buyer has to be able to trust the seller. And if there's no trust, then you can forget the idea of any kind of seller financing, if the seller doesn't trust the buyer. But so what do you believe his purpose was? He was a former real estate guy and he moved into the area. Was he really looking to buy a business to get an income for himself, or do you think he was trying to, find a buyer or make some kind of brokerage play himself? Like, what do you think was going on?
It was possible that he was interested in doing something for himself, but he was a shooter, I'd call him. He looks like he was doing a roll up, because when you check out his bio in California or whatever, he was into mergers, acquisitions, one of these young guys that think they know everything about everything, and they're putting it together. That was the sense that I got. So from a chemistry standpoint, I knew that was not going to play with our sellers, because, come on, these are a couple of old timers that have built a business, a career, and the last thing they need is another manipulation thing. So to your point, when it comes down to, I'm there as the qualifier to help both the buyer and the seller get a transaction.
Right.
And I'm not trying to, if you may, help the seller screen the seller, or excuse me, help the buyer or screen the buyer, or help the seller or screen the seller. I'm trying to bring a transaction together. And when I sense that there's not going to be honor, you know that it'll break down sometime. It's just a matter, do I want to put 4 months into what's going to turn out to be a dishonorable at the last minute situation?
And that's the key, isn't it? Because you have done enough deals to know that these take months to put together. And if you don't put the deal together, you're not going to get a paycheck. And so you need to have an idea from the beginning that the deal is something possible and that the people are going to get along. And really, a lot of the times when I'm talking with people and when I'm talking in my group coaching program, we talk a lot about these soft interpersonal skills, because without that foundation laid to make a good, solid relationship between the parties, nothing, it will never ultimately come. And I know I made that mistake when I was starting off a few times, where I was eager to make a deal. And so I would say, hey, seller wants to sell. This is the only guy who's come along to buy. We should try to fit this peg in this hole somehow, even though I'm not sure what shape they are. And it always ends up burning you in the end. And eventually you learn not to waste your time that way.
Exactly. And I think anybody that's either buying or selling that you're coaching and working with, if they will adopt the attitude that particularly, let's call real estate people and or business brokers or intermediaries or whatever, they're on commission. They have all the interest in the world to try to bring the parties together. And they ought to be treated that way and developed that way, and don't try to hide something from them. Now, that doesn't mean you have to undress every issue of your life. That's the other side of it. People say, oh, I got to be vulnerable. I got to tell them this. I was out on a transaction the other day, and 2 hours of this person's life story, I walked out and saying, man, I don't know if I want to deal that. So it's about the transaction. This is a business transaction, not trying to solve all life's problems, right?
Yeah.
But once you identify that, isolate and be very crystal clear and honest and honorable about all the business aspects, because you will be found out.
Tell me about the guy who didn't have any money, who still wanted to try to make a deal.
Oh, well, this was kind of fun. And he was one of the earliest, he was the first one. And he was so enthusiastic and wanted to move ahead. So I pressed the sellers. I said, this person said he'd never been in business. He doesn't know, but he wants to leave his corporate job and come do it. And he really wants, young guy, and he's been a gardener and he really wants to do it. He's kind of what you were saying is, this is a kind of opportunity, the size of opportunity that somebody could really get their start and then build themselves a good business for a year. So he came, and it was really nice, a person, and he brought his wife and brought his brother or brother-in-law or somebody, and they admitted they knew nothing about it, would need help on the counseling, but they were going to go out and get financing, and they were really enthused about getting into business for themselves. And the wife, of course, you can read it, is struggling with it, because now the husband's going to leave his full-time job and go in, and all of those issues. All right. But we didn't dwell on any of that. And so the sellers liked them and thought, okay, if this is a potential buyer, Paul, go ahead, move ahead. He said, but we're nervous because they don't have experience. All right.
Yeah.
And so I started working with them and encouraged them. They said, okay, I'm going to get the SBA or the financing involved. I'm lining this pre-qualified and all the positives of how they're going to do it. Well, then I get a call and say, gee, I got a consultant that been in the business and whatever and knows a lot. I'm going to hire him. Can you send him the information? I said, yeah. He signs an NDA. I said, if you're hiring a consultant. And basically, so you're not upset? I said, I'm not upset. I said, if you got an advisor or whatever, check the numbers, check it all out. So okay, so he goes that, then the advisor calls. And so of course I do research on the advisor, and I found who the advisor knows and this, that, the other thing, and solid character. All right. And so I talked to this business
So this is a
advisor.
guy from like the landscape industry somewhere.
He's been in the industry.
Okay.
He knows stuff. He contacted, and then of course you can check his pedigree out because you got Google and
Right.
LinkedIn and everything else. So I called the guy and I said, hey, this is that. Well, I've been around the business long enough. I said, you know, so and so. So we know people. We both know people, and immediately then we have a positive relationship. So I said, well, what do you want? What do you do? And he said, well, just send me the numbers or whatever. And any questions I got, I'll just call you back. I said, good. So I zip it out. Hour later, he calls me back. He said, man, this is a hell of a package. And I don't know if I had sent you in the past one of my other packages, whatever, but I do a very, very rigorous offering package. And he said, there isn't anything else really that one can expect here. I said, let me just talk to him if he needs coaching or whatever. And if he wants to do it, he says, there's nothing here, Paul, that would prevent it. It's financeable, it's this. And he knew all of the acumen. And he said he could use it as a platform to build. So he saw it immediately within an hour. He read it within an hour. He called me back. He said, let me see if he wants to hire me to do that. And then I'll coach him. Well, then the next phone, I never heard from him again. All right. If something came by my desk today, his name came up again. So I may be seeing him next couple of weeks. And this is how life is. It works. You know, people stay in the business. But anyway, this young person then calls me. And so he said, I guess the advisor said he wants to do it, but he wants me to hire him as a consultant and pay him. I said, well, oh, weren't you doing that? He says, oh, no, he gave me that free advice. Oh, okay. Whatever. So he now wants to hire me. I said, but I want to make an offer. I definitely want to make an offer. I said, okay. So I send a purchase agreement, all right, made out, conformed, standard stuff that we use in the business. And so now he wants to adjust it, this and that, the other thing. I said, all right, so we'll meet. So I said, okay, put your change numbers in there and we'll meet. So I meet with them the next day and to present the offer, and I go through it all, and he doesn't have the numbers in there. And I said, well, look, here, you wanted these numbers, put them in here. He says, well, I can't. I said, well, what do you mean you can't? My wife won't let me. Well, what do you mean? He said, and I looked at it, I said, well, this isn't even signed. He says, no, I can't sign it until I get a lawyer. I said, well, when are you going to hire a lawyer? And he said, well, I'm not going to get a lawyer until the buyer tells me that they're going to sell it to me. Right. So now I'm really confused. So the point of all that, and we could go in all of the other dialogue, but the point was the naivety of a buyer sometimes is such that they're not bad people. They just don't know that. I mean, do you want to buy it or not buy it? Do you want to? You've engaged a consultant that you don't want to pay. You got a lawyer that you don't want to pay. And you don't want to sign the agreement so I can present it as an offer, but you want me to present an offer. All right.
And see how the other party feels, maybe.
Right. Or get it accepted. So anyway, so that comes to an end, and I just shrugged my shoulder. So then that kind of upset me, sent me an email of how I wasn't cooperative or whatever. And I thought, I don't know, I can't cooperate in anything if I don't have anything to do. Well, the next thing, I get a call from another business broker in town, and he said he's representing this guy. And I said, oh yeah, I said, I know. And he said, well, do you want to share commissions? And I said, well, not really. I said, I've already spent a month talking to the guy. and I said, this is what happened. So I shared my reaction. He said, yeah, I know. I've talked to him and he sounds a little confused or this, that, the other thing. I said, so then he calls me back. He says I'll be a buying broker. And I said, well, it's fine with me if he wants to pay you as a consultant, buying broker or whatever. I'll work with you and do it. I'd be happy to do it. But nothing ever manifests on that other than more and more emails about why won't you sell this to me? All right. Business. So
he never actually wrote an offer that you could show to the seller.
No, and neither did his buying broker, who supposedly was going to represent him, all right? Because the buying broker ran into the same thing I did. he said he wouldn't sign anything unless he had a lawyer, but he wouldn't hire a lawyer unless, because he didn't want to pay. So it was, to him, it was all about, I think, permission. He really didn't have, let's call it family permission. And he really didn't have confidence in being able to do it. And he didn't have the willingness to hire the professionals. He obviously had connections with lawyers and professionals and whatever. But the point comes down to in qualification. When you're the seller, the qualification is, are you serious and are you urgent enough and are you realistic? And then the buyer, are you real and do you have money? And do you have the ability to execute the transaction? And so from anybody's standpoint in the world that is involved in buying and selling, I think they have to do a lot of personal self-reflection and understand, which is why I think your coursework and your various seminars and what's so available to people on your channel and everything else is so valuable to them, because if they can't get through what you're walking them through, if they don't have the time or the interest, the inclination, the skill set to digest that and discipline themselves to execute on it, it's only going to get worse. It's only going to be painful for them and for everybody else they touch. So I wish everybody would go through your material. And
that's a great idea. Everybody should.
They should. Whether, by the way, whether buyer or seller.
Right? Yeah, that's why it's out there. So eventually, you did meet somebody who did become the buyer. Why don't you tell us about how you met this person?
During those leads, one of them was another young, enthusiastic person that was just all over it, all right, and said that he wanted to do it. So he never been in business. He just had a lot of passion. He was a young guy. I said, well, how old are you? He was in his 20s, this and that. But he said, I'm going to the bank. Can you get me? So I sent him the package, all right, and he took it to the bank and he called me back. He was on fire. The bank said they can finance it. It looks, they could do SBA, they could do this and that, the other. Okay, great. So he was hell bent for election. We had to get this done, and he was responsive. He was interested. When he had a question, he called me, and he was engaged. So he had one of the number one criterion. He had the passion to make this happen. I didn't know if he had anything else other than the passion to make it happen. All right. So then I get a call from his banker, and his bankers. He said, can I get the tax returns? And I said, not until we get a purchase agreement and this, that, and the other thing. And I said, but I can tell you as a banker and as a financial analyst, I said, all the numbers that you see in that package are identical to the numbers that are in the tax return.
So there weren't a lot of add backs or personal expenses hidden in the business you had to adjust for. It was a pretty cleanly run operation.
Yeah, there was no personal expenses you had to adjust for other than owner's life insurance or something.
Yeah.
And both owners used a truck. It was a working truck, but they took it home at night, and that's about it. Everything else was clean, and the numbers, I mean, reconciled by the accountant all the way through for 5 years. So I figure after looking at 5 years worth, there was never any, what's this expense? Where'd this $42,000 come from? None of that over a 5-year period. So I was pretty, I liked the book. That's the way I do my work. I do rigorous financial analysis before I deal with it, because I know I'm going to end up doing it in the end. And I'm not willing to spend 4 months of my time and then show up and find a surprise. All right. Now, I did in this case.
Exactly. Because you know that in the States with the SBA program, the SBA, of course, they want to make sure that they're friends with the other big government department, the IRS. So that they want to use the tax return numbers to see if it cash flows, if the buyer is going to be able to afford to make those payments. And, I actually earlier today, I was having a conversation with someone, and they were looking at a business with so many add backs that the tax returns and what they were presenting to the buyer didn't match at all. And I said, this is fantastic. these guys have made this business unbankable. So no one's going to be able to borrow money to buy it, which means you can negotiate a better deal for yourself. But these clients of yours, obviously, they were better prepared for a banker to examine the business, which is good to hear. And so this guy was enthusiastic. He went to the bank. The bank liked the numbers initially. They wanted to look deeper. You did finally get that purchase offer, did you?
Well, here's what happened. So then he said, "Can we come see the business?" And I said, "Yeah." And he said, "I want to bring," he said, "my dad." I said, "Great." All right. And it's a good thing he did, because he was a young, enthusiastic guy. And he even told me when we were there, "Boy, I'm sure glad I brought my dad," because his dad was a more mature, been in business, asked right questions, knew something about the landscaping business,
Mm-hmm.
et cetera, et cetera. So it was a good chemistry. It was good. The sellers now felt like, boy, if we sold this, these people could take care of my customers. He actually has a clue what this equipment looks like.
Yeah.
He's asking mature questions. And even though the young man is enthusiastic, I believe, I trust the father. And so that's
Right.
the seller's perspective, going back to what you're saying. Hey, can these people take care of the business and my employees if I do sell it to them? In this case, if it would have just been the young man, he could not have inert enough confidence in order to get the sellers engaged and do it. But anyway, it was good chemistry. So then a question was, okay, guys, you're going to make an offer. All right. And I had previously made arrangements with the sellers of what was reasonable was put 10% down on a purchase agreement and then the balance over some schedule. And so they show up and they adjust the 10% and only put 1% down just to cement the purchase agreement.
As a deposit, you mean?
As a deposit.
Okay.
Right. And then they said, but they'll make the other 9% of the 10% we requested within 30 days, because they had to go out and get that money to put it down. And then they get the financing 30 days after that. So it'd be a 60-day deal. So with that 60-day conditioning, we took the 1%, the sellers accepted it, and we moved forward.
Okay.
Well, that's good news, except 30 days later, when the other 9% was due, they failed to deliver it. And they failed to deliver the other 9% because of this, because of that, all kinds of reasons. Well, that doesn't inert too much trust on the seller's half, so I got to keep that relationship going. That, wait a minute, let's let them do it. They got good reasons why to do it. They didn't want to put the other 9% down until the bank had committed to them that they were actually going to process the loan.
Okay.
And fill it with an FBA, and it was going to be doable.
So the deposit, Paul, let me ask you this. In your state, what is normal? Does the broker hold the deposit, or did it go right to the seller?
I had it made out to the attorney.
Right? To the attorney. Okay, so the attorney was going to hold it in his trust account.
Yes.
So the buyers weren't confident that they could arrange some sort of trust agreement where if the financing didn't come through, that they could get their deposit back?
I forget the details. Even in the purchase agreement, I think it was a refundable, or I forget whether it was stated refundable or not refundable. I think it was maybe not refundable. So that was their concern. Unless the bank had committed to them that they were going to get the other 90%, they didn't want to put their 10% in.
So they were skittish. They were afraid. They didn't want to lose that money, which is completely understandable.
Sure.
And the rules about this stuff and the way people negotiate is a little bit different by locality, I've seen over time. So they had the money, but they didn't want to give it until the banker had given the blessing.
Right, until the banker said, yeah, we're going to be able to process this loan and get this done for you. All right. Okay.
And so there was a delay then at the bank.
There's a delay at the bank. That's one of many delays. So we
know that we have to somehow get up to 4 months of delay. So
right. Well, now we're at.
Now, was this around Christmas time?
Yeah, I'm trying to think. It was October, end of October. Now it's end of November. This delay, and one of these delays was get the IRS. What people may not be aware of is, to your point, the SBA will only look at IRS documents. They will not look at tax returns from your. So the first request is get me the tax return. So I get the tax returns from the accountant. Well, that's the sellers or buyers asking for that. The problem is the bank ask the buyers to get the tax returns. Once the tax returns go to the bank, then somebody else that knows what they're doing in the bank about SBA loans says, oh no, we can't take those tax returns. We have to get them. I think it's a 4506T or something, a document that has to be sent directly to the IRS. And the IRS has to send them the
That's
documents.
right. And
You can't have anybody else handle it.
And what one of my other clients learned recently is the IRS sends them by mail.
Yeah, it's a couple of weeks. So anyway, there's a couple more weeks. All right. Yeah. And so at this point in time, to be frank with you, I'm kicking myself in the butt. Okay. Because as soon as I heard it was an FBA, it said to me, Paul, I think you better go get all the SBA documents and fill this out for them. Because if I wait for them to fill it out, it may delay things. And I didn't do that. I just kind of, oh yeah, we got it under control. The bank's really good and all these other things. And I listened to that story. And from now on, anytime there's an SBA, I will require the buyer to sit with me and complete all the paperwork. All right.
Yeah. Okay.
Because I know I'll get it done correctly. And no SBA specialist will find an error in the work because I will have done it according to what I know needs to be done. Because what happens in these things is every week there is another thing that the SBA specialist finds.
Right.
You already pointed one out, the unbankable version, right?
Yeah.
In this situation, it was not that it wasn't unbankable. They had 5 years of P&Ls. When they got them from the IRS, there was 1 year that there was a loss, all right? And then you had the loss carried forward. On average, it was very profitable. But on the year of a loss, now it's a red alert to the SBA. You had 1 year, it's a loss. Now you need to rewrite your business plan, and we need detailed cash flows by month.
Yep.
All right. And so they just keep raising the dialogue and the ante on all of that data. Well, if you know all that's coming, and it's all written in the SBA requirements document, you could have done that ahead of time. So right. Now in my case, because and you've been at this a long time, but I haven't found it typical of a business intermediary to have done the level of financial analysis that I've done on my projects, all right? They usually, when you say, oh, by the way, what was the monthly cash flow? Then they say, oh, we got to go hire an accountant and get that all figured out.
When I was doing brokerage deals back when my office was still open, I would sit with people and write full business plans with usually 2 or 3 years of monthly cash flow statements. Whenever real estate agents would say to me, oh, you business brokers have such a high rate of commission, I would say, yeah, but we're doing the appraiser's job, the realtor's job, and the mortgage broker's job, if you want to draw the analogy to real estate, because we're showing people what the business is worth, then we're finding the buyer, and then we're having to do all the work to help the buyer get the financing, which usually means, to your point, preparing cash flow and business plan, and then taking them oftentimes to friendly bankers we know are likely going to want to do the deal that we already have a relationship with. And
exactly right.
You didn't know these bankers, did you? This was
No, I did not know these bankers. But as this thing dragged on, what I do have a couple of bankers that'll do SBA, and I was within inches. I asked the seller or the buyers, I says, give me all the paperwork that you've done so far. I'll get this financed. Because I could have gone to a couple of my other friendlier bankers that were more in tune to get this thing pushed through. But by that time, it was almost complete. But one of the things that your financial analysis course that you just completed here and released is an essential piece of the ingredients. And the typical broker, mortgage broker, say real estate, they won't do that kind of level of detail. But the truth is, if you want honest financing by a real bank, and it's not some family or friends deal they're going to throw at it and not look at it, you need to do the level of thinking that your course requires.
Yeah.
And if you don't do that, two things. Number one, it really isn't going to be bankable by the general banking community. Number two, you really have no idea what you just bought. You 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 bought yourself a cash flow problem in 30 days that you just didn't understand.
Well, it's interesting because I mean, we've so far in this conversation, we've talked about cash flows, we've talked about forecasts, and we've talked about buyers with no money. I recently saw a little video on the internet, and it was talking about one of these no money down guru type deals that was being offered. And he was giving an example. He said, if this business has $500,000 of EBITDA and there's $1 million worth of equipment, he said, if that business will be worth $1.5 million, we can put up the $1 million of equipment as collateral with a asset-based lender. We can borrow half that, so we'll get a $500,000 down payment, and then in year 2 and 3, we can give the $500,000 of EBITDA to the seller to pay him off for the business. And I thought, so you're going to commit 100% of EBITDA to debt service. And I thought, what about the taxes? What about replacing any equipment that breaks down? What about, like, there's so many other real life expenses that come out after these cash flow numbers that are being used to value businesses. And to a person who's been in business or someone with any kind of accounting or bookkeeping experience, they would think for 5 seconds about that statement and realize that it didn't make sense. But the problem is that a lot of business buyers are people who are not in the finance space. They're not an accountant. They're in some job they don't like, and they want to be a business owner, and they want to buy a business to avoid risk. And they'll see things like that and get drawn into it and think that it's real. And if you, I more than once I've seen people who have overcommitted their cash flow to debt service, and when you say things to them like, do you realize the principal portion of a debt payment is not an expense? They'll say, well, what do you mean? They'll say, well, that loan payment to the bank, only the interest part is an expense. The other part of it is not. So you could end up giving all of your cash to the bank for debt service and still have a profit on paper and owe the government income tax.
Right.
And people who are not familiar with this stuff don't get it. You actually have to plan it out and make a forecast so that you can understand truly what cash is available and what other bills you're going to have to pay, like income tax.
Exactly. And what I've seen most often is people are totally ignoring operating capital,
Yes.
working capital. And they want to because it's so pleasant to make the deal work. The deal will work if you can totally ignore working capital. and they're not trying to be bad. They're just enthusiastically wanting to not look at working capital problems because they know the deal will go. And that's what you're articulating there. And
Yep.
the tax doing in a whole bit. So I'm thinking of the delays. So we're moving through, and all these issues keep coming up. The bank needs more credit info on the buyer. The IRS wants more info for a 5-year P&L. The bank needs appraisals now. Now they call me up with appraisal. I said, well, we have that. But they got to get a third-party appraisal. All right?
On the equipment or on the business value?
On the equipment and business value, if you may.
Okay.
All right. And so, fine, they go do it. Well, that's 2 weeks, right? And you can't talk to them and send this. Oh, so then the appraisal guy gets it, and the grab guy says, wait a minute, we don't have titles for all these. We got to do title search on every vehicle. We have to do a title search on every trailer, et cetera, et cetera.
And they probably found some old liens that had never been properly removed.
Exactly. There's liens on some of them. And so now, fortunately, I have a very detailed due diligence ledger that I do. And I had quietly, on behalf of the sellers, built all that stuff up because I knew at some time it was going to be done. So every time there was one of these inquiries, my turnaround time was hours. They said, I need titles on every vehicle. Within 2 hours, I could send them a PDF with that. We need this, we need that. And that was not because I'm a genius. I'd just been there before. And I said, I'm going to need this stuff sometime. And so I had it so I'm in my office, I get the inquiry, I turn it around. I don't have to go out to the company, search their files, find it, copy it, send it in. Well, what happens is this thing still wouldn't have closed if I had not all of those documents already in my possession. All right.
Yeah.
Including leases and every nuance of the lease and all of those things. So getting all those titles and insurances, their insurance contract, at the very last minute, they're ready to do closing. And the bank says, oh, we don't have their workman's comp insurance, or we don't know if any of this equipment, we're taking lien title on all these equipments, we don't know if it's insured. You know, and I'm going, SBA specialist, could you not even read your own documents? It says you got to attach a copy of your insurance certificates on all of your vehicles and wherever. Well, I had already done that. I mean, I have a property and casualty license, so I know the insurance field a little.
Was this a share deal or an asset sale?
Pardon?
Was this a share deal or an asset sale?
It was a share deal.
It was, okay. So the existing contract for casualty insurance for the equipment and everything, that stuff was all being carried along.
Yes.
So the insurance would already be in place, because if it were an asset deal, of course, then the buyers would have to create their own entity, LLC or whatever they were going to set up, and then they would have to go get their own insurance, probably have a binder at least, or a letter from an insurance agent saying that everything was going to be covered from the day the transaction occurred.
Right. If in fact it was an asset sale, you're right. The list of experts, lawyers, accountants, real estate people, state licensing bureaus that would have had to been chased down on this, it'd be next Christmas before this. Because there's so many laws, and today's in the USA with the financial security, and nobody can sign on. I mean, it's ridiculous what they put you through now. I tried to make a bank deposit the other day, and they lit through the window, you know, and you give them a check, deposit this check. They had to send the check and a deposit slip bank to me so I could put in the money, $2,000. Unless I personally wrote on the $2,000 on the deposit slip, they would not accept the deposit. That's how stupid it's gotten. All right.
Yeah, I have a friend who's an insurance agent, and one of he's a broker, so he has different lines with different companies, and he got audited, and they just had this huge stack of paper with little tags where things were not initialed on the right place and all this kind of thing. And it's just, you're right. I guess if there were ever a lawsuit or something, or an investigation, that one little missing thing creates a whole branch of liability for another party. So everyone's just trying to protect themselves so much. It ends up creating this very inefficient environment for getting things done.
Oh, it's awful. And in the insurance, annuity, financial, property and casualty business, those little tags on a typical insurance application, there's 15 places where an agent signs and at least 15 places where the customer signs. And if any of those are not signed within a certain date, if the check that they're putting as a deposit is 3 days later than what was put in the account, they send it all back. You start all over again, and you have to get the entire set of every place re-signed. And it's really pretty crazy. But at any rate, so the titles, the better, you have to get a business plan, as you already articulated before, that is in concert with the SBA requirements. Now, the SBA might be the most rigorous, but every bank is pretty much the same as that. If you can't pass that SBA criterion, you're going to have a problem with your bank somewhere down the line anyway on general financing. Clean titles. Then it comes down to, this was an interesting one that I hadn't heard before, but I learned later, because in this sale, we were selling the accounts receivables and the payables, because he was just taking over the whole corporation. All right. So the two things. One, the bank that was writing the SBA loan told them to go out and get other financing for their receivables.
Okay.
And the reason is their bank processing is such that they will not take clients below $1 million in receivables.
For a receivable line of credit.
Exactly, because the cost of processing receivable, they only want big boys. And they
Right.
say, you got to go find yourself another banker.
And just for everyone listening, the reason for that is that if a bank gives you a line of credit specifically for receivables, they're going to require an aging list from time to time, sometimes even as often as monthly. And some banker is going to make sure that the limit of that line of credit is not too high for the actual amount of receivables that you have. And if it's too small a deal, then there's just not enough earnings in the interest for it to make sense for the bank to have a person doing that work. And so this is why they'll have a minimum like this. And a lot of the times a banker will tell you they'll get you a receivables line of credit, but when you sign and actually look at the paperwork, they're just giving you a general line of credit that you're personally guaranteeing, and they're letting you self-police that because they don't have the resources, and it doesn't make sense for them to examine your receivables every month or quarter if it's not enough money.
Exactly right. And that old way of banking where you had your local community bank or whatever that could do that, that local bank officer had ways of tracking that, and they could do it because they knew with character and credit, and they saw the person every day coming in and out of their bank, and they knew all of that. Today, it's just total automation. It's total social distancing. Nobody knows anything. Only the computer knows. And if you don't have $1 million worth of receivables, they don't want their computer tied up trying to do it. It's really fascinating, but that's a significant thing that will delay a deal. And in this case, could have really delayed the deal.
So how much were the receivables approximately?
About, I'm trying to think, 50, 60,000, 55, 60,000, I think, something like that.
Okay. And so they were told to go talk to somebody else about getting a receivables line of credit. And who did they go to?
They went to another bank.
And what did the bank say over there?
I didn't get engaged in that detail, but it was the bank that one of the parties had been banking with for a long time and apparently had a personal. So my guess is that he not only had to secure it with receivables, but he probably had a personal guarantee on it.
Yeah.
Who knows? Some of these banks, they're so crazy to make you back it up with your 401k or something. I mean, they get into you as deep as you can with your house and everything else.
Yeah. Yeah. If they can get it, they'll take it. Yeah.
Yeah. So I
So
don't know what he ended up doing, but that was why the subsequent delay on the receivables when we went to close. All right. You know, the part of the story. Let me cover a couple more delays and then we'll get to that. All right.
okay.
The sellers, let me see. Oh, then as we're getting close to finishing up all of this, I'm trying to make sure that the receivables aging was accurate to get it closed on the 31st. I get a cutoff date. So this is right down to the wire now. And at the wire, then I find out from the sellers that on the books, a loan that shows on the books that they had shown as equity was actually a loan from a bank that was a corporate loan. All right. So I got them to pull out the corporate, and I say, you guys come up with some money, you go down and pay that loan off. I says, because once these assets, I says, I haven't seen it, but somewhere in that paperwork, it's going to say that there are no other banking liabilities.
Well, yes, exactly. Because the bank who's doing the SBA loan, they want to be in first position in this company's capital on the liability side of the balance sheet. They want to be in the first position with security over everything. And if that other loan was in there first, then by the time they get to the registry office and they realize that they can't get, their lien registered the way they want it, the money isn't going to be delivered.
Exactly. And that would be one more delay.
Yeah.
And so I didn't want that to happen. So I got unfortunately, the owners had money and they went and paid off their loan and they got that bank cleared out. And so everything now that receivable, everything was free and clear. All the other assets were already free and clear because they were old aged assets. And there were some commercial trade payables or whatever, but they were all current, all up to that day. So there wasn't anything of great danger, let's call it.
Right.
It was clean books, clean balance sheet. Everything was reconciled and accurate. And so that's all cleaned up. In setting up the sale, I had a transaction attorney that handled, and he was kept current with all of this. And then right that weekend prior to the closing, I was able to give him all of the remaining issues, and he prepared all of the paperwork. And that was at a fixed cost that was split between the buyer and the seller, which was a very, and I've done that in previous transactions. It's a great way to do it if there's cleanliness and there's not a lot of acrimony between buyer and seller and all of that. And they're all being forthright. It's better and cleaner just to have one guy make sure all the legal stuff is filed properly and all the liens and everything is done. They agreed to all of that. And reduces the cost. They just split the cost of that, paid the attorney. But then more delays for other reasons. I think I've already covered the delays. So here we are at the end of January, and the bank decides that, boy, this loan could be processed and booked back in a 2019 booking. So from a bank profitability standpoint, they were now incentivized to try to get this loan closed.
Okay, because of their fiscal year end or something.
Exactly, fiscal year end on December 31st. So the sellers, they're delaying, and we're not getting it closed, and everybody's getting nervous of whether this is going to happen and with all of this work. And so then they say, hey, the bank called and they want to close next week. I said, okay, good. Why that changes? He said, well, they figured out that if they do it by next week, it'll qualify for their last year fiscal year. And so the point of me bringing that up in every it was just a reminder to me, in every transaction, everybody is interested in only one thing, and that's themselves. And so it's important for buyers, sellers, intermediaries, everybody to make a list of all the players. And in this case, the bank was a player.
Yeah.
The SBA is a player. That's different than the bank, right?
Yeah.
And then the attorney's a player. And then the seller, in this case, there's two sellers. They're both players. And then there's buyers. And then the buyer's son, they're players. And then the buyer's accounts receivable banker is a player. And so when you make the list of players on making these transactions come true, and the buyer's wife and the seller's wife and all the other influences, the list typically gets up to 30 people or so. And to keep things moving and secured and happening, you have to be alert to 30 people. And in the closing room, you go in there and all kinds of people. In this case, a new attorney showed up. What is he doing here? Well, he was hired by one of the parties to come and look over one of the documents. Well, that's okay. If we'd have known ahead of time, we'd have sent him the document. All right.
So who was he sent by?
By the seller, by the buyer. All right.
Wow. Okay.
Now, I don't know that if he was there really helping them with the banking documents and or our documents or whatever, but it was a new party. All right.
Wow.
And that's the point that I want to make is on all these transactions, knowing who all the parties are, who all the players are, you can do your due diligence, you can prepare, you can resolve any issues they might have. The worst thing that happens in these things is at the last minute, somebody shows up and wants their $1.73, right?
Yeah.
And well, now they're going to hold up the whole deal because they've decided that they got to have their $1.73 for something, all right? And it's a problem, all right? It's
so now that the bank was suddenly excited and anxious to get it done on their timeline, did that open the path for things to happen more quickly? Did it happen in their timeline?
It happened within, I want to say 10 days or so. Sure. No,
Yeah.
They moved ahead and they had everything that they needed now because we'd done all these other things. And there was only one, they needed a lease, the property lease company to give them access to the property or something. They had some agreement. Well, then trying to negotiate that, of course, they didn't want to sign it. They want to sign their own version of that agreement. And in the final analysis, the bank backed off on that and just let it go through, pending that has to be done. But in that case, the lease has only got 3 or 4 months left on the lease anyway. So from the property lease guy standpoint, I'm thinking, yeah, why do I want to change a lease that's 5 years old?
Yeah.
Make an adjustment to a lease when it needs to be revised in 3 months. We'll just do it all. So you look at it, here's the thing, everybody has their own interests at heart. And that's not an unreasonable request from that guy. Just because your bank says that you want to do something for something you want to do.
In a lot of cases like that I've worked on, what ends up happening is they'll just do the lease renewal with the buyers at that time for a lease that comes into effect when the other one expires.
Right, and that could have been done had they not been brought to their attention the day before closing.
Right. Yeah. So he was kind of left out of the consideration of what was going on.
Exactly, up until the last minute when the banker says that, oh, gee, we also need this. Well, that's my point on this whole thing, is looking at all of these things, and we also need this is too late at closing. But I laugh about it. I cry about it too. But you're thinking, I've never been to a closing, whether it's a personal property, a home I bought, or whatever, where anybody seems to have done their work ahead of time. Have you ever been to one where they actually come prepared and they actually have it all done? The mortgage company, the title company, if they all seem to storm into the room at the last minute, oh, I'm putting it out on the copier, I'm doing this, I'm thinking, what are you people doing?
But by the time I got to the end, before I closed my brokerage office, I had gotten to the point where I had been shepherding my buyers and sellers towards the same set of lawyers. And because I had been working with the same lawyers over and over again, by the time I got to that last year, it was starting to happen much more smoothly. And the other thing that I did that other people I don't think do is, whenever I was working with any lawyer, regardless of if I knew them or not, I would make them send me their paperwork, their contracts they had prepared, before sending them to the other lawyer. And most of them would resist that. And I would sometimes have to actually tell my client, call your lawyer and tell him that I work for you too, and that he has to send them to me. Because I would read through them as a lay person with a little bit of education on how to do these deals. And I would generally find 3 to 5 mistakes. And so if the lawyer sent it to me and then I highlighted things and sent it back to him to fix, then what got sent to the other attorney would be cleaner. Because if the other attorney saw those mistakes, he would call his client and say, well, I don't know, they're trying to be sloppy on this. This is what they're trying to do, or they're trying to pull this, and oftentimes the lawyers are cutting and pasting other work that they've done. And you'll find names of other companies that aren't related to the deal will be mentioned in these papers, or they'll put terms in them that don't match the actual offer that was created, because they didn't read the offer properly enough in order to match the terms into the whether it's the bill of sale or whatever document that they're preparing. So I found that if I filtered all the legal stuff and went back to them with mistakes before it went to the other party, things started to go a lot more smoothly too.
No, you're exactly right. And having multiple readers of any document and being open to those corrections accelerates the plan. And the more you can get up front and get everybody prepared, while trying to get people in the position to do that is exactly what you're doing. I'm just trying to help you help yourself. And it's just like working with attorneys. I'm not an attorney. I'm not putting my nose into your business, the title business, attorney business. I don't want to do that. But without being an insult, let me read it. Now, in my particular case, I used to edit the newspaper in college, all right? And one of my skills is I can look at a full page of paper and I can pick out every semicolon that's out of order and the whole bit. It's just something God gave me. I just look at it and I say, there's a spelling error here, this. People look and say, how did you find that? And they come out when you do that, all right?
Mm-hmm.
So when you have that, you might as well take advantage of whoever has a reading skill. Even after I do it, I make mistakes and I give it to somebody else to read it. And I ultimately read the documents backwards in order to find the errors. The final draft is how I do it. That's my process. But nobody's trying to be a bad guy here.
Mm.
All the buyers, this whole list of 30 sellers, buyers, lawyers, accountants, I'm not accusing anybody of trying to do anything other than accurately serve their self-interest.
Right.
The challenge is, let's do it faster.
Well, and so the buyer went to another bank to get financing for receivables, but why don't you tell us what ended up happening on closing day? Because I don't know if that bank was quite as ready as you thought.
Well, no, the night before, the buyer tells me that he's short money because he didn't get the receivable financing. And, well, what do you mean? And then he tells me, well, the bank said that they wouldn't do the receivable financing. I'm sitting, why'd you tell me that 30 days ago? All right. And whether he just found out or he was keeping it to himself because he was tight on what he was putting in the business. Well, then the first reaction I had was, wait a minute, he's just trying to finance this with other people's money. He read one of those books that you refer to from time to time about some wizard of how you buy a business with everybody else's money and never have to do anything. You just sit home and have them send you checks, and there's plenty of those books of how to take advantage of everybody else in the world. And people read that stuff and they actually believe it can be pulled off, right? And I haven't found that in my own life, all right, that it can be. Ultimately, there's an accountability that pays.
Yeah.
Anyway, this phone call comes in the night before. And so now I'm thinking that night, oh, this is a fine thing. I got till 1 o'clock tomorrow. Now what are we going to do? And the answer is, the next morning I call them and I said, hey, we got to do this. The sellers are not going to be happy, all right? And they weren't. When I called them and I said, well, there could be some this issue. They don't have money. Will you guys take paper back? Will you take, finance back? And they hit the roof, all right? So then I'm saying, boy, I better call my backup buyers and see if any of them can be there. Well, then I tell the buyer that, gee, the sellers want to close. And he's, well, if they won't do it, then we'll walk away. So I'm thinking, okay, now you got the bank there that's going to give you the money, but you only have part of the money and you can't carry the whole thing. So
they had their down payment, but they were lacking the money for the receivables.
Basically, yeah, is what when you do the math on it, that's about it. All right. It's because he said, I'm going to meet with my other banker this morning. Well, you don't show up at another banker's 2 hours before closing and expect that banker to give you
right
the 30 or 40 grand that you're going to need. It just doesn't happen that way. So he comes out of that meeting, calls me about 11. Well, the banker couldn't give me the money. He's going to do it, but he's going to take 2 weeks and this and that and the other thing. And I said, what are we going to do? I said, I don't know. And he said, well, we'll cancel it all. I said, no, show up. Show up. So as I'm driving over there, I called the attorney and I said, well, I said, they aren't going to have enough money. And I know nothing else to do. I says, write up a receivables agreement for me on a loan. I'm going to have to loan them the money to do it. So they showed up. They went into the banking office. They came out with all the banking money, and they came into the closing room with us. They had all the banking money, and they didn't know what to do. So I went quietly to the buyer and told him that I'll finance it. So he was very happy that I'd finance it.
So you, as the broker, lent him the money for the piece he was missing for the receivables.
Exactly.
And I think it's a great way to end the story. And I've been there, Paul, because I've had to do it 3 or 4 times. I ended up lending money to buyers and getting paid over time. In all my cases, it was an installment note, and I would get a check for a few $100s every month, which with the up and down cash flow of business brokerage isn't such a bad thing sometimes, but it certainly is not very nice when you are not planning for it. In my case, all the times I did it, I knew a few weeks before that I was going to end up having to do that. And you found out the day before. And so, what was the plan? Is just for them to pay you back as soon as they get their hands on the money?
Uh, the note was as they collected the receivables, they would pay me.
Okay. So, and that of course creates a little bit of a danger in itself, because it would mean that as the receivables came in, the money would go to you instead of being available to operate the company. And so,
What happens is that it actually went to them and then they had to pay me. So the diligence I had to do was make sure that when they did collect those receivables, that they were not using it for operating cash flow, but were uh, uh, paying me, because it really was the receivables were assigned to me. All right.
yeah. And
And,
so,
and
were
they
you able
did.
to collect it all yet?
Pardon?
Were you able to collect it all yet?
Yeah, it's all been collected.
Okay. And how long did it take you?
30 days.
30 days. Okay.
Paid it out,
So
and they
you
got
feel
their.
better about it now?
Oh yeah, yeah. I'm I'm at peace with it now. But it like you said, it's one more surprise, one more 30-day, one more experience, and in their case, one more fortunate thing that I had the ability to actually do it. What
Yeah.
happens if you're dealing with somebody that couldn't show up and loan them the money? Then what would have happened? It would have not happened. It was fortunate that I had the ability to do it. Right.
Yeah.
So, at any rate, there are so many little experiences, nuances, fun things, relationships that I wanted to share with you. And originally, my thought was we would make this one of those holiday calls early, but then, of course, that got delayed, and it got delayed.
I'm still gonna put it into that series. I'm gonna give it the last number for the 2019, because I think it's very apropos that the business that was supposed to close around Thanksgiving ended up closing. What was it finally in February? It must have been in February.
February 4th.
Yeah. So it ends up closing in February, and then you have to wait another 30 days in order to collect all of your money in pieces as it comes in. Because I think for the people listening who are either going to buy or sell, it's a great story of what they can expect to go through this. But for anyone who's listening, who's thinking they might want a career in business brokerage, I think it's a real honest testimony to the reality of just how difficult it can be to make a living in this field, because you can't rely on any kind of plan. You can plan to do 5, 6, 10 deals a year, but as we've heard from Paul today, those things are going to get delayed. They're going to get sidetracked, and all of the different things that you brought up about delays at the bank, for instance, each one of those little things they asked for, any one of them could have caused the deal to fall apart if the resulting information wasn't correct. I had a client in California who bought a business up in Washington, and this was a first for me. The SBA looked up the address of the business he was buying in some kind of database they have. And do you know what? The office is located on land that has been declared part of a floodplain. And so they wouldn't release the money to buy the business until the buyer had obtained a flood insurance policy. And flood insurance when you buy it, it only comes into force 30 days later. So you can't run and buy it when the forecast says there's going to be a bunch of rain that could cause flooding, right? And so that delayed the closing, because he had to go buy the flood insurance, and then I believe they had to wait for it to come into force. So, something nobody would have ever have thought about. And the seller of the business was surprised, because they had never knew about any kind of flood problem that existed in that area. So,
right. And of course, the floodplains are being adjusted all the time as the environments are being adjusted. And you're right, you could be on what is considered dry land today, and in certain areas of the country, it could be a rated floodplain next month,
yeah,
because this new survey showed that the waters have changed, and it's pretty dramatic. what can happen. So it is a surprise. Yeah.
Look, I want to really thank you, Paul, for opening up and sharing the details of going through this deal, because a lot of the times we'll see things post deal on the internet in particular, where people will say, hey, another deal was done, congratulations, pats on the back, here's we sold another one, kind of thing. But it's very rare that people will share all the challenges, details, and give sort of the play by play of how you work through one of these things, and what can happen. And I really like the fact that you highlighted that every person and every spouse of every person who's attached to this deal could have their own different set of goals or desires as far as the outcome of how this transaction comes. It's, in sales training, we often talk about how people listen to WIIFM, what's in it for me radio. And that is true all the time. People are concerned about their interests and what they want to get out of a deal, or what they want to have happen, or the way they perceive the interests of their loved ones. I want, something good for the people that I care about. And sometimes, that doesn't even jive with what the person they care about is looking for themselves. And so these things can sometimes conflict to create some of these delays.
That's right, and it's dynamic. It changes.
Mm-hmm.
You don't know, because these are elongated projects. And if you think of the description of this one, this is about a year long from the time of me engaged to the final closing. Now, there's a lot of things that happens in these. I call it 30 people. The
Yeah.
list of 30 people. There's a lot of things that happen in their lives over 12 months,
Mm-hmm.
and all of a sudden, what may be a very cooperative seller or buyer or lawyer or whatever, all of a sudden they're acting weird. Well, you have no idea that their spouse or their child has a health problem, or they've lost money in the stock market, or a coronavirus, or Lord knows what happens on a daily basis. And so
Yeah.
you're trying to manage this and whatever. And what looks like cooperation all of a sudden goes into conflict. And so we all have to be a bit of a psychologist, and we have to be patient with each other. We have to be positive and proactive, and not take, just like some of those things when I found out, oh, Paul, we need this. Oh, Paul, my heart goes, oh man, why didn't you tell me about that before? What? And so you have to control yourself as a buyer, as a seller, as an attorney, that everybody is pursuing mutual best interest. You have to assume that. And then you have to hold up your part of being that.
Mm. Yeah.
So if you assume everybody's positive and trying to make the thing happen and doing the right thing and being honorable, you have to do that. And then you have to be that and keep it together, and it'll all come to pass. Because there's no secrets in these, because these things are so tightly wound with legal regulations, financial regulations, all the intermediary parties that have to be involved. You're not going to pull the wool over anybody's eyes anymore. And it's all transparent on the internet and everything else. So if in fact you think you can do a sneaky deal, there's no such thing.
The word I use is quite often is collaborative. People go into it thinking it's more like a transaction, like for a house or an automobile or something, where both parties are going to be jockeying for their point of view, or what have, to your point, like pulling something over on someone. But it's such a complex thing. It has to end up being a collaborative process where both sides are working together to get the thing done. I've had sellers go in and meet with the bankers of the buyer because the banker wanted to know more details about the business. And the easiest thing to do was just say, hey, why don't we have the sellers come in? They can answer all your questions. Right.
Yes.
And so it's working together to get this very complex thing done. Yeah.
And if everybody does that, then they will go much faster, and it'll be much more honorable. Now, the closing part for me, the satisfaction is, yes, it closed, I got paid, it's complete, and I've talked to both the sellers, they're happy, and I refer to spouses because one of the nice things that happened is one of the spouses got on the phone and told me how happy they were. And I had never met that spouse. So I felt good as the intermediary. I delivered for the sellers, and then I went and visited the buyers, of course, when they had the final payment of the financing that had done. And they wanted to show me the changes that they've made and what their plans are and the version. And they were very enthusiastic about their business and what they had and what they could do with it. And said that, you know, after they get rolling, if I see other businesses that they could add on or do, that they really wanted me to watch out for them and to help that they were very happy with their purchase. So that summary point means it's one of those collaborative, satisfactory, nobody's got anguish, if you may, that they felt it was mistreatment or I got the better of you or any of those things. And that makes me feel good that it was brought together. And I think everybody in the transaction, buyers, sellers, and all the other intermediaries, if they can all seek that level, business will go forward great. And they'll be happier camper.
Awesome, Paul. Thank you so much. We'll talk to you later.
Take care.